Hello. Yes, good afternoon, everybody. I hope you can hear my voice and at the same time see my screen clearly. So today's webinar, I want us to look at something which you've looked at in the past. I think you remember we checked it some days ago, some months ago actually, and we looked at the strategy behind it. Today, I want us to build on what we looked at on that day. I want us to see exactly what are the best ways, what it actually means, what NFP means, how to trade successfully, and how to avoid losses, especially when you are trading the news. So what I have to say first of all is that if you're not sure about news, then I recommend that you just stand aside. First of all, do your own due diligence, do a lot of research, do a lot of research before you say that you want to trade news. If you can get good or adequate research concerning so if you can get adequate information concerning the particular news you want to trade, then maybe at that point you can consider trading it. But if you don't have any information, it's better to stand aside. Just let the news be. Let the news be. Do not enter any trades. Just let it be. Learn first of all, and then you can trade the news. Okay, so today it is going to be trading the non-farm payroll report. So according to the definition we have on this website, this is a non-farm payroll report is a key economic indicator for the United States and represents the total number of paid workers in the United States, excluding those employed by firms, the federal government, private households, and non-profit organizations. So you may be wondering, why are we so much interested in the employment rates in the United States and not any other country, maybe in China, maybe in the UK or any other place? The reason is that the United States of America is like the king because of the dollar. The economy is very stable. The dollar controls almost everything that's happening everywhere. If you want to export your goods, if you want to import your goods, you have to change your country currency into the dollar for you to be able to be received from the other end. So if you want to import, assuming you're importing a container of particular goods, you have to change the money you have in dollars, transfer them into the exporter's account, and the exporter will now transfer for you the goods. But you can't just go direct with the local currency to make the purchases. So that's why the United States dollar is very, very important. The performance of the dollar is very, very significant. And that is why we are even interested in the total number of paid workers in the United States. Because when these people are paid, the result affects the dollar in one way or another. So the other thing is the non-farm payroll reports consistently uses one of the largest movements of any news in the foreign exchange market. As a result, many analyst traders, funds, investors, speculators anticipate the NFP number and the impact that the news will have in Forex. So it says the NFP is typically released on Fridays of each month, providing the total monthly increase of or decrease in paid workers across most businesses. Increased number may show economic expansion, but may also give investors reasons to be concerned about inflation, and decreasing numbers suggest a broader economic concern. Okay, so you may understand this or you may not understand it entirely, but what I want us to look at now is when it does happen and how you can trade it based on what you see on your charts. So most people don't realize that we already have FreshForex. So we already have all the news you expect. We already have them listed on our website. You don't have to go to any website, just check that we have them listed and when we expect the news to be coming up. So if you come here under Forex Analytics, there is Economic Calendar, click it. So when you click it, you can see we have the list of all all the news that you are expecting. What we have here as red, this is the most important news. This is like the high impact news. This one here is a medium impact news, and then you have this is a high impact news, medium impact, and then this is low impact, low impact, low impact, and low impact. So when we say low impact, we don't mean that it's not useful. No, it's here for a reason. So if you want to know about a particular news, if you don't understand what that news stands for, click it and then you can read what it means. So that's the first one. If, for example, when you get this ADP non-farm payroll, you can see, click it. You can say, it says, shows the monthly change in 19 manufacturing sectors in the United States. The indicator does not take agriculture into account. The calculations includes data collected from 400,000 private enterprises. The indicator characterizes the labor market and industrial sector activity. Employment growth can have a positive effect on the dollar quotes. So this is what this means. Let's now check the news we want to look at when it will happen. It should happen on Friday. So Friday is actually the 4th. So this is 3rd, which is tomorrow. We have BCB, high impact news. We also have, we only have like one impact news tomorrow, high impact news tomorrow, that one. Then here, tomorrow, we have, on Friday, that is, on Friday, let's see. Sorry, this is still on 3rd. There is this one high impact news. We have another one here. This is another high impact news. And then we have another one, another high impact news. This is BOE, government Bailey speech. And then you have another high impact news, non-manufacturing, PMI. This is another high impact news. So you may choose to focus strictly on this high impact news because they tend to affect the market so much. Or you can just be taking care of all the other news, including this one, or just one news out of all the other news. But it's very good to have in mind that we are having a high impact news so that you know exactly how to prepare yourself as a trader. On the 4th, which is Friday, at this time, we have the first high impact news. It's at 12. This is 12 midday. Then there is another high impact news. This is employment change in Canada. So Canadian employment change shows a change in number of official employed Canadians in the reported month. The indicator is used when measuring Canadians' labor market. The indicator growth can have a positive effect on the Canadian dollar. So this is what it means. This is the employment change in the Canadian economy. It's just a second. And then we have this one, which is the non-farm payroll. So this is what we want to look at. This is what we want to focus on today. I'd like to say that whatever I'm going to say now, it's not an indication that the price is going to do exactly what I've just said. No. The price may do what I've said, or it may fail to do what I've said. It depending on whatever the outcome of the news, it may follow exactly what I've said, or it may not follow what I've said. The fact is, just ensure you have your risk management in place. If in case of anything, then you know exactly how to trade successfully without having to mourn about the losses. So I want us, just a second. I hope you can still see my screen. So I want us to look at it in terms of the MT5, what exactly we expect to be happening. Of course, we're going to be looking at the US dollar here. One second, let me get it. So we're going to look at the pairs where we have the US dollar as the index. And the other thing is, since the news has not already happened, we want to look at exact scenario, what should happen just before the news and what we expect to be happening after the news. So one thing which I'll say is that assuming you are trading this, you should know by now that mostly the news which is affecting the market now is not the news which was released yesterday or today or maybe in a month ago. The news which is currently affecting the market is something which was released like 3 months, 6 months ago. It doesn't necessarily be that what's happening now is being affected by the news that you're seeing now. Sometimes the news may have an impact, but not immediately. It could take years or even months for it to actualize. So you have to be very, very careful, especially when you want to trade the news. So what you need to do is, like we've seen here. Let me show you my screen. Like you have seen here, you can see that the news is going to be at this time. This is the normal Moscow time. This is when the news is going to be released. So your job as the trader is just, when you are like 1 hour, 2 hours to the news, do not enter any positions, or if you have positions opened, freeze them. Freezing means you open trades in such a way that you're neither losing or winning, especially if the impact of the news is effective. So if the news is very, very aggressive and maybe the price goes up, the price goes down aggressively, then you don't find yourself losing anything. But ideally, it is very good if you have any positions, protect them. Protect them just before the news. So 1 hour before the news, protect those positions. So I'll come here. That is 1 hour before the news. This is what you do first of all to set up for the news. So assuming this is when we expect the news to be happening, this spike here, this is the effect of the news. So what you do is 1 hour just before the news, or some minutes before the news. Just 1 second. So here we are assuming that the news will start here, will start on this candle here, this candle. Some hours before that news, it is very good to identify the highs and the lows that have been formed by the previous candles just before the news. That is, you'll come here, and then this is the time when you expect the news to be happening. And at that time, usually it looks like this. So you'll find that, okay, this is the time you expect the news to be happening, the candle after this candle. But because you have already these candles, you just come here, and then you pick a high, and then you pick an immediate low in the last 2 hours. So that would mean that we'll pick a zone like this. So usually if this was the day when the news should be happening, and this, usually if this is the day when the news should be happening, you'll notice that the candles will not be as light as they are here, but rather they'll be very, very much consolidated. You'll see a lot of struggling just before when the news happens. So you'll have a zone where you've marked the highest high, you've marked the lowest low, and then you have a pending buy stop here, you have a pending sell stop here, so that when the price spikes upwards just after the news, this buy stop is triggered and your stop loss is fixed at the low of this candle here. Then the same place where we have the stop loss, the same place where we have a sell stop. So if this goes up and the price spikes upwards, you are in money. If this goes down and the price spikes downwards, you are also in money. But one thing, it's not always a good idea to tell the price exactly where it's supposed to go up to. So do not find yourself in a situation where you begin to tell the price that, look, you're supposed to be going up, you're supposed to go down, and when you're going up, you're supposed to go up to this level. No. The thing, it is very simple. Take your profits when you're in money. Simply take your profits whenever you're in money. So when you have a pending buy stop here, sell stop, and you have a pending buy stop here, and the price triggers this. Don't say that because we have this range at 20 pips or 30 pips or whichever number of pips, you say, okay, this number of pips here, this is like 50 points. Don't say that the take profit is going to be 20 points or whichever number of points you're thinking about. Just say, okay, when the price goes up to like 20 pips or 30 pips, I'm going to step out. That's simple. When the price goes exactly up to that number of pips, you step out and you close out that trade. So if this one hits the take profit and the other one is not yet triggered, you're supposed to close also that one so that you get out with profit. Wait for the next day or wait for the next trade news if you are that person who likes trading news. So we'll get out here, we'll also get out there. If the first one triggers and the take profit is hit, I step out with profit. If the next one is triggered and I get just enough profit to cover my stop, to cover my commissions and also spreads, I also get out. I don't wait for price to get 50 pips if I don't know exactly what will happen, because in most cases the news will spike up and then spike again down. So if you say, okay, I'll be waiting for 50 pips, it didn't go 50, it went and took the stop loss. If you say here I'm going to get out at 70 pips, it didn't do that, instead it went upwards. So this is what we are trying to avoid as much as possible. A case where you are stopped out on both trades while you could get out with this number of pips or this number of pips. So here comes the other question where somebody may want to ask me that how now do you manage a case where, for example, here, how do you ensure that you don't lose unreasonably? Because you're likely going to lose a lot of money if you have your take profit here and the stop loss here. This is the amount you are losing to risk to get this one. What will happen? Because you're likely going to lose, if you lose, if the price goes here, you lose definitely a lot. If the price goes into your profit, you'll get a small. So this is the good news about the whole thing. It is all about scalping when news is happening, because news has a unique random effect in the market, and that settles after some time. So if you say that you want to hold on to trades for a long time, you're likely not going to get it correct. You have to at least get out when you have money, or if you can't get out and the price maybe spikes upwards, it is better to drag your stop loss, drag it instantly. Wait, if you have a buy stop here and it has been triggered, your stop loss is here. If you find that the price is somewhere here, drag your stop loss somewhere here so that you protect what you already have. But don't hold it and say that for some reasons you expect that after this breakout it's going to continue that direction, maybe after another 200 pips. No. It is the most dangerous way of trading news. You have to at least get the zones just before the news happens. Highlight the highest high within that zone. Highlight also the lowest low within the same zone. Then have pending buy stop trades where the news, where the lines are. Have the pending buy stop, have the pending sell stop, so that if the price triggers any of them, you step out and quickly. Because you remember one thing, your money is safe until you trigger a position. Your trades are going to be very, very safe until you trigger a position. You buy or you sell. When you do that, then you're not safe. Either you're going to make money or you're going to lose money. Whichever the case, you have to be prepared for a loss or for profit. Preparation for profit does not mean that you wait for price to go your way indefinitely. No. Preparation for profit is get out when you're in money. And for the stop loss, also get out when you've lost enough. Don't find yourself that after the price has gone up and is coming down, your take loss not hit, you find yourself dragging the stop loss from downwards. No, this is not the ideal way to do it. Leave it there. And to avoid this, calculate your lot size based on the distance where you've entered and the stop loss, where you expect the stop loss to be at, and also the percentage you'll have from your account. So if you expect for some reason that the price is going to hit your stop loss, risk just 2% of your account, have your stop loss there, and have the lot size calculated based on where the stop loss should be at and the risk from your account. So that would mean 5% from my account. At the same time, I'm having my stop loss fixed. So if this one loses and this one loses, it's just 5%. Nothing much, nothing more, nothing less. If this loses, the other one wins. So if I lose here 2%, this is also 2%, I wait for the next news. Chances are the next news is going to be profitable. So I'm going to get much more than whatever I lost here eventually in the long run. Not necessarily on the next trade, but on the next few consecutive trades, I may likely be able to profit way much more than what I lost if I was just risking anything randomly. Does that make sense? So I hope that makes sense. This is the only thing I wanted us to look at for today. If you have any questions, please feel free to post them for me inside the chat option. I should be able to respond to them as fast as possible. And that should be the end of today's analysis. So thank you and see you.